Hello everybody, this is Lara at Elliott Wave Gold and Elliott Wave Stock Market, but soon to be Pure Elliott Wave. That's pureelliottwave.com, and we're launching that on the 21st of August. I'm going to update my Ethereum wave count, and then we're going to together have a look at MIOTA. MIOTA, we'll have a look at that together. I haven't done any work on it, so this is a format where I'm just going to video the process I go through working out an Elliott wave count. And then if we have time, we'll do some classic technical analysis, at least for Ethereum. Okay, so I've just updated my charts for Ethereum, so let's zoom in on cycle wave 3 on the weekly chart, and it's doing pretty much as expected into a triangle. So now I'll expect down for C, up for D, and then down for E. Let's grab it's pretty much what I'll expect for Ethereum, pretty much the same as for Bitcoin, I think. Let's just have a look back at how primary 2 and 4 behaved within cycle 1. So primary 2 looks like a double zigzag, that's how it fits best, and primary 4 looks like what's this high? Is this beyond 390? And this is a regular contracting triangle for primary 4. And here primary 2 a single zigzag, and primary 4 possibly a triangle. Let's take a look at how it's unfolding on the daily chart and see if it's still meeting all Elliott wave rules, this wave count. Well, I've got it here labelled as a combination, but I think that's a no. I'm going to delete all this and try again. Had expected it to go up either way, but let's check the scale. What this is, an arithmetic scale. Let's squish this up, make sure the channel is sitting right. Okay, let's get some labels in for a triangle and see how the subdivisions fit. Oh no. So A would be over. Is this the low? No, here's the low. So this looks like a zigzag. A, does this look like a pretty good impulse? I think so. If I have B over here though, then that would have a truncated C wave, and now C doesn't actually look very good. I'm just wondering if minor B could have been some kind of triangle. And there's an overlap here too, isn't there? Yeah, that's no good. So this has to go here. I want to open this up so I can see this more clearly, because this makes a difference to how you count the... Oh, I see. Right, yeah. This makes a difference to how you count the triangle. I think minor B here's a triangle. It's not a perfect looking one, but it does meet Elliott wave rules. So this is a regular contracting triangle. C's not allowed to move beyond the end of A, it doesn't, and D's not allowed to move beyond the end of B, and E's not allowed to move beyond the end of C. So sideways movement in an ever decreasing range. For an Elliott wave triangle, the trend lines should be respected. They should provide strong support and resistance. This one does. The only problem is the trend lines are converging, as they must for a contracting triangle, but they're not converging really very much. Well, it meets all the rules. It doesn't have a perfect look, but it looks mostly okay. Okay, so now let's just quickly calculate the length of intermediate B in relation to intermediate A. And yes, that is an old school calculator you hear me using. A bit old school, but it works. It's only 57.55%. Should go higher. I'd expect it to be more like 80%. Most likely going to be a zigzag. Oh really, is there an overlap there? yes, there is quite a decent one too. Huh, okay. A can't be a diagonal. That third wave doesn't look very good, does it? Could intermediate B be a double zigzag? One of the triangle subwaves should be a zigzag. Sorry, a multiple zigzag, but only one. It's usually D, but sometimes it's B. Maybe this, I don't think this is going to resolve the problem of how minor A subdivided there, but let's have a look. Because there's still that overlap. Oh, that looks terrible. No, that doesn't work either. I'm just wondering if intermediate B could be a regular flat. A, B, C, and this for A is a double zigzag, B is a zigzag, but C is just so long. For a regular flat, A and C really should be close to equal in length. For a zigzag, like intermediate A here, C is short, A is extended, that is absolutely fine. They most commonly tend to equality, but they absolutely don't have to. There's no rule that says they have to. I'm going to go back to the single zigzag labelling for intermediate B. I think this is going to be best. I wonder if minor B was an expanded flat. No. Okay, I'm going to leave this as imperfect as it is here in minute 3. I'll put some labels in here. Maybe it had a brief shallow second wave and then a more time consuming deep fourth wave, but you can't be sure exactly how that's going to subdivide unless you look at the hourly chart data, and I don't have access to that. So sometimes we have to make some assumptions about how things subdivide at lower time frames, and that's okay. Let's put some triangle trend lines on this, and then I'll bring C down to here. Maybe we've got a little overshoot there. Elliott wave triangles should adhere strictly to their trend lines. Every now and then you'll have a small overshoot within the triangle until you get to E that can overshoot at its end. But within the triangle subwaves, apart from E, it should be really strictly adhered to. So I'm going to sit C down there. Now I'm going to calculate the length of B. If it's 80% the length of A, where would that end? 3831.4. So that would be somewhere about here. Let's get some labels in for minor C. Oh, I can see a nice impulse here for minute 3. This looks okay. Yeah, that actually looks pretty good. So let's put this very general target, and that 80% the length of a triangle subwave is based on research. When I say research, I've done thorough wave counts of all the data I can possibly get, going back to the 1970s, of several markets, and calculated the depths and lengths of corrective waves. And I found that triangle is around about 75 to 85%, quite a bit of a range. So this is a very general target only based on that research. Triangle subwaves, particularly the B waves, most commonly are around about 80% the length of the A wave. Let's have a quick look at the daily chart for some classic analysis for Ethereum before we move over and do some analysis of MIOTA. It looks like today it may be forming a bearish engulfing candlestick pattern, which looks like it has support from volume. We need to wait for the session to close before we can have confidence in that, though it's entirely possible price could bounce up end of session and it may not form this candlestick pattern, so I'll keep an eye on that. This upward trend from here on up is now extreme. ADX is above both DX lines, but it's not at above 45 yet. When this market has a strong upward trend, it can reach very extreme. ADX can reach above 70 in both DX lines, while price moves a substantial distance. So just because it's extreme now doesn't mean it has to end. But RSI dipped reasonably well into overbought, and now we've got short-term single bearish divergence. So given ADX is extreme and RSI is indicating divergence, I think we may see more of a pullback here for Ethereum. Let's look out for support about 2,900. And stochastics, nope, not neutral, I need to change that, that's overbought. And the moving average situation is full bore bullish. The short, which is the yellow 13-day, Fibonacci 13-day, is above the mid Fibonacci 55-day, which is above the long 200-day moving average. They're all positively sloped, and price is above all three. So the probability of a bullish run continuing is higher. This is a really clear bullish look. So I think we need to wait for this session to close. Let's go back to this Elliott wave count. Yeah, okay, so it could be minute 4 is not done. So for the very short term, let's pull in a short-term invalidation point for the Elliott wave count. 4 can't overlap 1, core Elliott wave rule. And so for this count, for the short term, an invalidation point is 2428.817. I'll just check that. Price point 2428.8171. Let's be accurate, that's important. And then primary 4 can't move into primary 1 price territory. So for the short term, if price remains above this point, then this wave count remains valid, but I wouldn't want to see it go too much lower in order for the wave count to have the right look. So let's bring in a trend channel here. If we do see a bit more downward movement, I'd look for pretty strong support at the lower edge of this channel, and I'd look to see what does price do if it gets down there. If it gets down there and then it has a good bounce up, then that pullback could have resolved this bearish divergence we see between price and RSI while ADX is extreme. Let's also watch on balance volume. It's not as strongly technically significant, I'm saying that wrong, but this little trend channel with resistance and support for on balance volume doesn't have good technical significance because of the slope of the trend lines. There are 3 things that give trend lines their technical significance: slope, number of tests, and how long they're held. More shallower slope, greater number of tests, longer held, more technical significance. This is somewhat long held, not too long, but it's got a bit of duration here. There's a few tests, 3 tests for the top one, and maybe about 3 tests for the bottom one. So not too many tests, not too long held, but enough duration, but it's got quite a strong slope. But with on balance volume and price in narrow channels, let's watch on balance volume. If it breaks first, that could indicate the next direction for price. And let's use this channel for price. Again, this trend channel has quite a strong slope, so it doesn't have strong technical significance, but there is some. Okay, let's move over to MIOTA. I haven't looked at this data apart from a cursory glance, and this looks like a really good possible opportunity. I like the look of this one, and I really also like that it's only about $1, so chucking $100 or $200 at it and just letting it sit there for a few years could potentially turn out to be quite a good idea. So I'm going to have a look and see if it has good looking Elliott wave structures, and again, like they almost all look, looks like there's a first wave up here, a second wave over somewhere down there. Is this the low? I'll have to check that. And then that means it would be in the early stages of a third wave, which I like. Let's view this on an on a semi-log scale so it has a better look. Oh, there's a problem. 2's moved beyond the start of 1, so that can't be where 1 starts, so it has to start down here, which means it's not going to have a good look at all in terms of Elliott wave structure. If we started it here, I was thinking I could see a good 5-wave impulse here. Yeah, that looks pretty good. No problem whatsoever with these markets with their extreme volatility having brief shallow fourth waves and more time consuming second waves. They don't always do that, but they do some. It's fairly common. It's really common tendency in commodities. I'm so used to it for gold and US oil, which I analyse on a weekly basis. And I see it also in cryptocurrencies sometimes. But okay, we can't start the wave count there because this is 0.0796 and this is 0.14. So I'm going to start that. And, well, maybe in its early days, back in June 2017, it just didn't have enough volume for good-looking Elliott wave structures. That's entirely possible. Okay, let's have a little look at the possible structure of cycle 2. And have I got it at the low? Yeah, I did get the low. Just real quick, because there's not a lot more to do for MIOTA. Oh, I don't like that. No, I think we want to put A down here. But if I put B here, I think this, no, this is a double zigzag. That doesn't, it's not going to fit as a single zigzag very well at all. Let's pull in a double zigzag and see if this has a good fit. I think it is going to be pretty good. A looks like it's a nice 5-wave impulse. Yeah, that looks pretty good. Oh, and now I can even see 5 in here. That looks pretty good too. No, not the emotive wave. And there. Yes, there. Really quick. Shallow zigzag for intermediate B here and intermediate C. I think this is going to work as a really good looking impulse. Oh, not so fast. Why? That third wave doesn't look so good. It looks like a 3. So I want to see this over here. Is this going to fit? Okay, yeah. Okay, now you notice that this fifth wave, minute 5 to end minor 3, has a curved look to it. This one also, minute 3, has a curved look to it. That is absolutely fine. I'm just going to real quick show you on gold why this is so acceptable. Here's an example of a curved looking impulse for gold. Starting out from the lows, overlapping first and second waves. This is how it normally starts its trends, and then it accelerates through the middle of the third wave, and then it explodes at the end with a really strong fifth wave to end a third wave 1 degree higher. And it gives gold's impulses this curved look. Slow start, strong middle, explosion at the end. I'm so used to expecting to see gold's impulses look like that after years of analysing this particular market on a daily basis. I have no problem whatsoever with seeing these curved impulses for MIOTA, because these cryptocurrencies, I'm so used to analysing commodities and gold and oil, and I notice that cryptocurrencies tend to behave in similar ways. They have extreme volatility. That doesn't look very good. I think maybe intermediate B is some kind of flat correction or combination. I don't want to put A there because then C's truncated. I don't want to put A there. That doesn't look right for B. Okay, maybe intermediate C is some kind of ending diagonal here. I'm checking the wavelengths. It's important. I'm checking, no, see, that doesn't work at all. 3 is longer than 1. 5 is shorter than 3. 3 is the longest. And 4 is shorter than 2. This diagonal would be neither expanding nor contracting. What is this? I really want to see B over here, but oh, I see. Okay, got it. B is zigzag, X, expanded flat. Oh, nice. Yep. And this is a little zigzag. You can see the B wave in there. I think this goes here, and X looks like a nice little zigzag. So intermediate B is a double combination, W, X, zigzag, X, expanded flat. For the expanded flat, yes, C does move below the end of A. Okay, great. And now intermediate C is going to fit quite nicely as an impulse. Perfect. And now Y looks like a zigzag. No, I'm not going to put A there. I'm going to put A here. And I'm going to have B as an expanded flat with a really long B wave. That's okay. There is actually no rule stating a maximum length for a B wave within a flat correction. There's a guideline that they can be up to twice the length of the A wave. The rule is they must be a minimum of 90% the length of the A wave. I'll put that there and that there, yeah. And sometimes every now and then they can be longer. C looks like a pretty good 5. Not there. Let's pull that down, thank you. And intermediate C also looks like a pretty good 5. And intermediate A looks like a really good 5. This is why I want to have it here. I'm going to put 1 here. Yeah, that's good. 3's got a strong end. 4 brief and shallow compared to 2 more time consuming. So this is why commodities and cryptocurrencies have those curved looks to them. Let's go back to this one here. Well, let's look at this. No, okay, well, let's just look at this one that I've just done here, intermediate A. The second waves are quite often time consuming and quite often relatively deep. They form basing action over a longer period of time, and then they tend to accelerate through the middle of the third wave and explode at the end of the third wave. In a bear market, they can form selling climaxes. In a bull market, they can form blow-off tops. And it's the fifth wave to end the third wave, 1 degree higher. That's usually the strongest portion of the impulse. So it's the end of -3 here, which is the strongest portion of intermediate wave A down. When they have that tendency, the fifth wave in here that ends minor wave 3 is particularly strong, and it forces the fourth wave that comes just before it, and the strength forces the fourth wave that comes just after it to be more brief and shallow than their counterpart second waves. So it's absolutely acceptable in a commodity and a cryptocurrency to see a more time-consuming second wave and a more brief and shallow fourth wave, and this curved look to their impulses. Absolutely acceptable, really typical behaviour. Now, and having said all of that, it doesn't mean they have to behave like that, just that they often will, particularly in a third wave, but they don't always behave like that. I'll stop here because this video is now far too long. Thanks so much for watching if you managed to get through to the end. And again, if you're interested in getting my Bitcoin analysis once a week, along with gold, S&P 500 and oil, then register your interest at pureelliottwave.com. Thank you.